In the first quarter, we looked at housing-related names to play the improving housing market, but you're actually warming up to a home builder now.
Yeah, I think that the group has been hit enough. It's underperformed. And the one that I look at is kind of the bellwether, the industry leader in Toll Brothers, basically because it has the high end, it has great land exposure, and I think that there's some margin upside as they integrate acquisitions and continue to have strong pricing. But historically, I've not liked the, when rates are rising, right, and the yield curve is steepening, I've not liked the home builders. But I do think the underperformance is certainly worth a look here.
What I find interesting with Toll Brothers is that it has significant exposure in Texas.
Right.
And after meeting with the Paychex CEO yesterday and looking at their jobs index, the most improved region is the Mountain region, and Texas in particular, Dallas, Houston, Austin. After speaking with Freddie Mac's chief economist, the most improved region in the country is Texas.
So there's that, certainly,
right.
And there's good exposure there, but 50% of their exposure is also in the Northeast and Mid-Atlantic, and that's been hit by weather, right? So I think the combination of growth in some key markets, like you're suggesting, as well as a snapback in the Northeast and the kind of the weather-impacted regions really sets them up well for the quarter ahead.
In addition to the regional exposure, let's take a look at the consumer as well, because consensus is for 2014, the labor market is improving, housing market is set to improve. We're in that key season with finally getting some warm weather in the Northeast. I think we should look at the consumer because it seems like there's some strength there.
I think there's also what's going to be important about Friday's non-farm payroll number is the wage numbers, right? If we start to see a lift in wage growth, well, that is going to probably be a little concerning for people on the inflation side of the story, but I don't think it's going to be enough to really make a scare. And at the same time, it's positive for the consumer. So better weather, better confidence, better jobs. And then you also have your home prices, and if you do own a home, they've been elevated as well. Most recent Case-Shiller numbers were up 13% in home prices around the country. So the consumer feels pretty good, and I think that's where you want to be, one of the places you want to be overweight in the market.
You also have to remember, too, tax refunds are coming in as well. Sure. We also have horrible comps for April because the weather was, we had almost 10 days of rain last April. So I think you have that to look at. But to wrap it up, what stocks are you looking at in particular? Well,
I like a lot of the consumer names, I mean, that have fallen, right? I mean, Costco, for example, that has pulled back from the 120s to the 110 area. I like that a lot. And I think the weather has not been so great. So when they report comp store sales next week, maybe you get a pullback and you buy on that dip. We like Yum Brands. It's been a huge laggard from last year's China problems with their chicken supplies. I think they've fixed that. We like Nike quite a bit. I think that stock pulling back after that great quarter is really a bargain at this point. And we just bought PVH because they made an acquisition that people didn't really like, and it's taking a little longer to integrate, but we think the valuation is there and very attractive.
Okay, great. Thank you very much.
Thanks.